What's going on, everyone? In this video, I want to cover why trading trend days are so difficult. Now, we're going to completely eliminate strategy, and I'm going to talk to you a little bit about theory because I believe this happens to a lot of you guys. A lot of you guys, for one, either you're taking way too many trades, okay, and we're going to cover that in a minute, or two, you're used to something that you've seen where some trader or some Discord community or some guy you heard from or some trading model, these traders are making 50 points a trade, 100 points a trade. Am I saying that it's not possible? No. But what I'm saying is that your concepts are a little bit off. And what I tend to see is that for the traders who are looking for bigger moves, let's say between 20 and 50 points, between 50 and 100 points, which to me sounds astronomical. Now, I know that there's trading strategies and models out there that specifically are targeting, these big moves. It's not the way that I trade. So if just because something is different than what you do, like that's different than what I do, doesn't mean that necessarily it's the wrong way to do it. There's right and right way to do things, right? So it just depends on what's right for you. But let me kind of show you guys where traders I see getting into trouble on trend days, because for all those traders who want those big moves, you miss the initial entry, or a lot of times you miss where you're supposed to be getting in at, and then you really don't know where to get in after that. And also, for the traders who tend to like lose control of themselves in a trend day, it's typically you're going against a trend. You're trying to go against levels. So I'm going to paint you guys a scenario. Like, I'm going to do something just very simple. And this has no particular ties to any type of trading strategy. But let's say, for example, you have a level here. This is a level of supply. It's a pre-market high. It's a level of supply. Let's say, for example, you've got a level of initial balance. Okay, so you're looking at initial balance highs, and it's something like that. And then let's say, let's just make this video fun. Let's say you've got a prior day level sitting right here. Like maybe something 3 days ago, there was resistance right here at this area. Okay, great. So what happens to a lot of traders when the market starts to really trend to the upside or downside is you see it approach your level, it breaks your level, and then starts to pull back. So you tell yourself, okay, well, it touched my level, I need to go short. And then what happens? It comes right into a level of demand and then bounces and you get stopped out. So you never really catch your big move to the downside. You kind of start to catch a little bit, you go into the green, and then boom, you go back to break even, and then you start to give up a bunch of cash. And then what happens is you tell yourself, okay, well, I've got another level here, so it's got to be consolidating and it's got to be pulling back. So it breaks this level and then you start to go short again, and then you get stopped out again. And then what happens is like now you're just giving yourself a bunch of drawdown, and then okay, you've got this top target level here where you have this big supply zone from, let's say, 2 or 3 days ago, and price action breaks it and it puts in this wick, and now it starts to pull back, and now you're like, okay, there's no possible way that I could be wrong once, no possible way that I can be wrong twice. This is the better short here. And you start telling yourself, I should have waited for this level instead of taking this level or this level, and you get short here. And then next thing you know, you're expecting this market to just go all the way down and make a lot of cash, and it doesn't happen. And what happens is it pulls right back into that previous area that you were looking at as supply has now turned into demand, and it continues to run. So I see a lot of traders, and I've worked with traders for 3 or 4 or 5 years now. And what I see that happens is whatever it is that you're trading, it doesn't matter the strategy, you get so fixated on, okay, well, it touched my area of supply, it has to go short. Well, no, it touched my area of supply, it's got to go short. It finally touched the top area, it's got to go short. Instead of just understanding that just because there's supply doesn't mean that it has to reverse. Normally, supply zones are meant for pullbacks, they're meant for consolidation, but if the market is strong, you're going to continue on that trend. So instead of trying to get short here, what you're looking for is you want it to pull back, but you want to find that prime buying opportunity so you can take it back to the upside. Okay. And for those of you guys who are looking for the big, fancy, flashy moves, a lot of times what you're looking for is you're coming into the day session and you're saying, okay, well, I've got an area here. I need to see this area get broken before I can get into this trade. And, you know, I'm going to wait for it, and I'm going to go ahead and go long because I'm looking for a 100-point move. And what happens is it breaks that area, it puts in this high, but you're looking for it to come all the way back down and test that same area that you were looking for it to break out of. And although that happens sometimes, a lot of the times it's a quick break, right? Like it's going to break, consolidate 1, 2, 3 candles, and it's going to continue higher. So you need to understand that when your level gets broken, this is your prime buying opportunity after you hold for at least a 1 candle, 2 candle pullback, 2 candle, 3 candle consolidation, depending on the time frame you're on. I'm looking at the 5-minute time frame. Don't analyze this in a way where you're telling yourself, okay, well, we broke my level, but I needed to pull all the way back. Well, if that's the case, then you should have been getting in down here, or you should have gotten in down here, right? So the reason that I see traders having so much trouble in a trending day is because instead of looking at the supply zones as areas where you want to continue this long, you're looking at your level, whether it's a Fibonacci, whether it's a prior day high or low, whether it's, you know, something else, some other trading strategy that you use, London open, London close, whatever it is. You're looking at those areas as, okay, well, I didn't catch the bounce. So now since we came into that supply, I got to go short. Since we faked out and now we've reclaimed that level, but tested another area of supply that I have, this has to be the move. I've got to go short. Right? So you constantly are battling. The market will tell you when you're wrong. So let's say, for example, the market busts through this supply zone, it pulls back, it busts through and puts in a new high. Let's say you do go long here, right? And then let's say it tries to break highs and then closes back underneath the range. Well, that's your indicator to go out of the trade. It's technically damaged. But if it's holding the area, it's holding the supply zone that you were looking at, instead of trying to short that supply, you need to be buying long once we break, retest, break, consolidate, break, confirm, break, and hold that supply zone. Because that's now telling you that it's a trend day. It's a trend day. It was a trend day since here. So this was the initial flush off the open. This is the first pullback. We never took out that low. So once you never take out that low, instead of trying to short every supply zone, right? Every little new high you're trying to go short, you need to be looking for these pullbacks as buying opportunities, consolidation spots as buying opportunities, break and hold, break and retest as buying opportunities. Let the market tell you that this is not a break and retest and it's a failure. Then you're taking your loss here. But don't try to anticipate where the move's going. And that's what I see happen a lot to traders is they try to anticipate what the market's doing because they've drawn some lines on their charts. The lines on your charts are good and you want to have those. But it doesn't mean that just because you touch an area of supply or touch an area of demand that it's going to continue. And in fact, or it's going to continue to, or it's going to reverse is what I'm trying to say. Like you need to get into your mind that it might be breaking that level to continue and not to reverse. So a lot of traders will call for, I want a trending day because I just want to go one side. But typically when we have trending days, that's when I see traders losing the most because they're not going with the trend. They're taking a gajillion trades and they're trying to reverse the market at those levels instead of looking for those levels to get confirmed. And if anything stands out to you out of this whole video, I want this to stand out to you. Instead of looking to reverse the move at whatever level that you're looking at, if that level gets broken and confirmed, look to stay with that trend. Look to stay with that. Don't look to reverse it just because it touched supply. Don't look to bounce it just because it came down and touched demand. It doesn't have to reverse. some days you're going to get a natural trend. And when you get the natural trends, those are the most beautiful days because you can just keep putting on trades in the same direction. I hope this video helps you guys. If you guys need to try this out with Apex evaluations, 80% off, use code DAnthony. Also, if you guys want to trade with myself in the Evolution Traders community and you want access to all of my day trading strategies, there's a course available with an online community that you guys can join. That link is down in the description box below. I will see everyone on the next video.